Hello, welcome to the European Open Briefing for Friday, September 22nd. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So there's a bit of a risk aversion this morning, and once again, it is due to geopolitical tensions concerning North Korea. North Korea threatened to conduct another hydrogen bomb test. This has weighed on the dollar, pushing it below the 112 level against the yen. The euro is firmer this morning, continuing its recovery after Wednesday's tumble after the FOMC. We have the German elections on Sunday, where Angela Merkel is expected to win for a fourth term. So there's little risks concerning those elections, although the elections in New Zealand will likely be much more riskier given the tight election race there, which is and that has been weighing on the Kiwi. The pound is up this morning. Steady this morning. It was up late yesterday. There's hopes that UK Prime Minister Theresa May will offer the EU more clarity on Brexit, and as well as meet some of the EU's demands with regards to the initial request that the EU is demanding before they go on to talk about trade. The Aussie is hovering near 3-week lows. There's a number of factors affecting the Aussie, and oil prices are holding near multi-month highs. We have an OPEC meeting later today, so there's going to be a lot of interest to see whether or not we will get an extension of the oil deal that expires March next year. There's still some time away for that, but there has been talk that they may agree to an extension as early as today's meeting. So let's start with the dollar. We can see in the chart that big bounce on Wednesday after the FOMC, but since early this morning, dollar yen has been drifting lower. It has recovered to just below the 112 level at the moment. The dollar index, though, has been drifting lower without much of a rebound. It's currently trading at 91.97, though for the week dollar yen is on track to for gains of up to 1%. So the main news this morning is with regards to North Korea. The foreign minister has said that the country may conduct another hydrogen bomb test, this time in the Pacific Ocean, and following that Trump speech at the UN, where he said that if Korea threatened the United States and its allies, they would totally destroy North Korea. And there was, of course, a response from that by the North Korean leader, who called Donald Trump mentally deranged. So all of that is unsettling markets, though not as much as you would expect. We can see gold prices have edged up from near 4-week lows touched yesterday. But gold is fighting stiff resistance at the 1,300 level. So although there is a bit of a dampening of risk sentiment, it's not as much to the same extent as we had seen previously. And one thing worth mentioning is that now that we had the FOMC out of the way, next week there's going to be a number of Fed speakers, including Janet Yellen on September the 26th. So it's going to be important to see what they're going to have to say, especially as December approaches and those rate hike expectations have risen dramatically after Wednesday's Fed meeting. Moving on to European currencies, we can see the euro has been steadily climbing upwards. It's approaching the 1.20 level. We had flash Eurozone PMI numbers out this morning for September, and they were all much better than expected. And as I said, there's little concern about the German elections on Sunday. But overall, although the euro is heading higher, it has it does look like it will be consolidating for some time yet until we get fresh signals from the ECB with regards to tapering. The pound, on the other hand, did jump high yesterday on speculation that Theresa May will offer the EU up to 20 billion euros for a transitional deal once the UK officially leaves the EU in March 2019. It's also said that the UK is willing to offer the EU greater protection for EU citizens currently living in the UK, and it is hoped that this will break the stalemate with the Brexit negotiations, with which we've seen very little progress so far. Sterling is currently trading at around 1.3580 ahead of that speech later today. Moving on to the Aussie and the Kiwi both, of course, did come down after the dollar jumped high after the FOMC, but there's other factors weighing on both currencies. The S&P downgraded China's credit rating, and this did have quite a bit of an impact on the Aussie, which of course Australia is heavily reliant on China for its exports. The Aussie has rebounded a little bit to around 0.7950 this morning. We also had the RBA Governor Philip Lowe yesterday saying that although rates are more likely to go up than down, he said that the RBA won't be following other central banks in raising interest rates, in particular Bank of Canada and now the Bank of England, and of course the Fed. Although markets are expecting rate hikes sometime in 2018, the Lowe's speech was a little bit more dovish than what some were expecting. Moving on to the New Zealand dollar, we've got elections tomorrow on Saturday in New Zealand. It has been a very tight race between the Labour Party and the National Party. Markets are too much in favour of the Labour Party because of uncertainty about their economic policies, so that's why we've seen quite a bit of volatility in the Kiwi, although the Kiwi has managed to stabilise, currently trading at around 0.7314 against the US dollar. If you do see a surprise Labour win, that would potentially have a big negative impact on the Kiwi, whereas a win for the National Party will probably boost the currency. Quick look at oil prices because both Brent crude and WTI are doing rather well. Brent crude hit a 5 months high yesterday of 56.63. WTI hit a 4 months high of 50.81. We have an OPEC meeting in Vienna today. There has been quite a bit of talk that they will agree to extend the output deal beyond March 2018. Though given that that's still some time away, it's quite possible that we will not see any major announcement today. But if we do see signs that Libya and Nigeria, which are both exempt from the current deal, are willing to join the deal, or perhaps some talk of deeper cuts, that could potentially boost prices further if we don't get any deal today. But also there are fears that perhaps some countries might be less reluctant to, or rather more reluctant to stay with the deal, given that prices are now recovering, so there's less need to do that. So that's going to be the main focus as far as oil is concerned. Looking at today's economic data, we can see there the flash Eurozone PMIs for Germany, France, and the Eurozone. Later in the day, Canadian inflation and retail sales numbers will be in focus, and we're also going to have flash PMIs out of the United States, and of course May's speech on Brexit. That's expected around 13:15 GMT. That's it from me. Thank you very much for watching, and have a great day.